Welcome everybody to this video where we'll be analyzing the current situation of Grifols. Grifols is a Spanish-based company in the biopharma sector. The firm activities are worldwide. And just to cover a brief introduction in the plasma treatment solutions, the sector is expected to grow at a rate of 7 to 8.5 annually. Its characteristics is that there is a high consolidation of a few players. There are also high barriers to enter in the sector for regulatory, logistical, capital requirement, and access to plasma reasons. The main players usually own donor facility, which allow the companies to produce plasma treatment and controlling the full process. Additionally, this sector is not reliant on patents, which makes future revenue more predictable. And regarding the cycles of the business, the sector is very donor-driven. During the years of lockdown, for example, during the pandemic, those companies couldn't find donors, which increased considerably the price of plasma, and we'll see this during those years. The margins of those companies were definitely affected. Regarding past events, the company faced a short-term report during 2024 from Gotham City Research. The report flagged undisclosed debts, a consolidation of entities that were out of the scope of Grifols, and later on, the Spanish regulator found significant deficiencies in the financial reporting, particularly in the calculation of the leverage and some related party transactions. This led to a fine to the company and some of the founding members. And because of this, Grifols had to take action in its financial reporting and governance. Members of the Grifols family left executive roles. There was a change of CEO, CFO, and the company appointed some independent new board members. To improve the financial reporting, Grifols changed his auditor, which later on found out a write-down of 457 million of equity. And they improved also the companies that are included in the scope of consolidation of the Grifols group. The main players in this sector are CLS, but he is not strictly focused on plasma treatments. Then Grifols has been the only one that is like almost more than 80% focused on plasma treatments, and also the one with the largest number of collection centers, and finally Takeda, which is a diversified giant. Looking at the financials of its main competitors, we can see that Grifols is the smallest of the three, and CLS has the bigger margins. But we have to keep in mind that the different companies have different revenue mixes. So not all of them have are fully comparable. In the P&L, we can see that the activity of the business has been growing with EBIT margins around 16% during the last years. Keep in mind that during 2022 and 2021, the sector faced a shortage of plasma, which led to lower margins during those years. And the company recently got approved in December 25 by the European Medicines Agency the right to export plasma from his recollection centers in Egypt to Europe. This should lead to higher margins, since the recollection is cheaper in Egypt. And also, the company stated that during the foreseeable years, the company is planning to invest more in Egypt with more recollection centers and more treatment plants. Under the EBIT, we can see the company is expensing a lot of money in interest payments, but the company is planning to reduce financial expenses by deleveraging. Looking at the segment reporting, we can see that Grifols is focusing in the biopharma segment. I couldn't find any EBIT by segment before 2022, but we can see that the main activity is still able to have like an EBIT above 20%. Looking at the cash flow statement, we see that Grifols has been very aggressive growing. If we compare to the amortization and depreciation of the cash outflows from the investing activities, it more than doubled during 2022. We can see, for example, in those years where amortization was 400 million, 400, 360, blah, blah. But the investments were, here more than double, here more than double, and here, a lot more than the depreciation of his own values, which during the last year it has been like, it's almost the same value of the amortizations. Here they sold a business line, so they actually got money instead of investing, and during the last years they are again investing more than the depreciation, but we can see that it's been slowing down then versus the past years. Grifols was also affected by low supplies of pharma during the post-COVID years, and the operation activities had a hard time to generate cash, but they still invested very heavily. And we can see it in the operation activities here, where the business generated very few cash, but they were still investing a lot of money. This led to the company having to push the leverage quite significantly. At the same time, we can see that during the last 2 years, the company has been had like significant cash outflows in his financial activities, which is good. The company is repaying the loans, so little by little leveraging. In the balance sheet, the company has a strong liquidity position. The current assets are more than doubling the current liabilities, and on the liability side, half of the liabilities are debt. So this is one of the risks in the balance sheet of the company. In the debt ratio, the company has reduced the financial liabilities since 2023. This means that the company is able to finance his own growth and reduce debt significantly. And if we look at the cash generation from the business, excluding growth and external factors like financing with the EBIT minus tax, Grifols has a lot of potential to grow profit by the business itself, but also by reducing debt. If we compare additionally the market capitalization of the company, it could be trading at very low ratios. And keep in mind that this is a healthcare company in a defensive sector, and also that at current valuation, the company has a higher book to value, book to share value than the own capitalization of the company. In the ownership structure, we can see that the founding family is still present through different investing vehicles, since Deria, Scranton Enterprises, and Ponter Trade are all linked to the Grifols family, even if it's in a lot of cases different members. And then there is not a policy of remuneration to the shareholders, but the company distributed a dividend until 2021 around 0.30 around 0.35 euros. But from 21 to 24, there was no dividends. And again, in 25, the company is starting to distribute 0.12 euros per share, and they intend to keep distributing a dividend. And with all this being said, I leave to your judgment the quality of the company, and see you in future videos.